And speaking of oil, right?
Yeah.
It's Wednesdays. We're going to jump over, man. We get those oil numbers in about 10 minutes. So there's your current contract we were just looking at, March. These are 5-minute bars, I believe. Yes, they are. And to pull up some of the markets here, we're going to jump into the commodities. Crude oil, we'll start it off with the 11 a.m. expiration. So we're trading right now 53.11. Ideally, would be looking for something around maybe 53 if you wanted exposure in both directions. 53.25 would give you similar, just depending you want 11 or 12 cents on each side of the market to start off. But really, we're not getting too many great options where 52.75 or 53.50 are going to be the closest you can get on the 11 a.m.s. Now, we've gotten some movement. Let's see where the noons line up. Noons are going to give us a different option, of course, because within that hour, when these open, 53.25 is going to be an option. Now, right away, you're going to have intrinsic value to the bearish side, so this is going to be your out-of-the-money option, right? Basically, your spread. Yeah. But we're trading at 53.10. Contract starts to have value at 53.25, so that's going to cost you about $20. And then on the flip side, here's your bearish trade. You're going to have 15 cents of intrinsic value. So I can already tell when you get used to these, if you have 15 cents of intrinsic value, you're going to be paying a similar 20 cents in premium. Yeah. This is going to be about $35. And boom, on the dot, okay?
Right, look at that.
So $55 you're looking for. Now, keeping in mind, though, you have a 15-cent head start to the downside.
Okay.
So if you needed to, to break even on the downside, right, we need 55 pennies, so it'd be about 53.70 to the downside, or, you know, 53.80 to the upside. So to put it, you need 70 cents of movement to the upside for your break even. You need 40 cents of movement to the downside to your break even. And that's where these kind of take on a little bit bearish, bullish. But if you want exposure in both directions, just more than about 50 cents you would need away from that 53.25 as we come into those earnings. And let's just jump, because I'm curious around if maybe the dailies line up. 53.50 is our only option in the big ones, and yeah, those don't quite line up. We've just had too much movement to get right on both directions. You check out that chart.
So that's, you know, I have a bias to the downside right now, but that's still quite a bit of movement that you need, because we haven't moved that much, you know, in the last 5 days. We've moved that much, but you know what I mean? It's,
I hear you. Yeah. I mean, to price that product, though, you know, we just were up at 53.76 and traded down 75 cents in the last hour and 20 minutes with no news, and that's going to give you exposure for an hour and 30 minutes after the news, right? So it's probably a fair assessment in terms of the premium that you should be applying to those contracts, with, especially when you look, if you could trade both sides of it, right? As in, we just went at 1 in the morning, 53.75, down to a low of 52.87, back up to 53.75, back down to 53. You're getting 75 cents to a dollar movement both directions over and over, which would be nice, because you could always close out one of these trades, look for the bounce the other way.
Yeah, huge.
Yeah.
Welcome back, folks. So what do we have here?
Crude oil inventories rising, 1.26 million barrels. Median analyst estimate was about 1.8 million barrels. Okay. They have the Bloomberg survey estimate, which was a rise of about 1 million barrels. So nothing too surprising at first glance. We'll jump over to the charts, though, see how the market is reacting. And yeah, nothing too substantial, right? We were trading at about, is it 53.10? Coming into that news report. Yeah. A bit of a pop right away, but keeping in mind that would actually 53.25 on these examples was going to be kind of our pivot point. Right. So that's why we started with a little bit of a bearish bias. We got a pop of about 15 cents. Nothing too dramatic so far in that market, and you might not see anything too dramatic if we didn't get that big of a surprise. You know, we'll check back on the full breakdown as it comes out, but right away, 1.26 million barrels, pretty close to in line with what they were looking for.
Yeah.
Boom, baby.
There you go. So see, the correlation is happening, because oil popped, S&P's popped in between that break.
Okay.
Wow.
Okay.
Stay right there, folks. We get Fast Market coming up next, and we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
We're almost there.
All right. We'll get there.